Good morning, everybody. Welcome back to my blog. I hope everybody's having a good week. I know I am. Today we're going to do something a little bit different. I'm going to be talking to Alana Hallaert at First Mortgage Company. A lot of my folks that buy homes from me are coming from out of town, that may be a first-time home buyer, and they really don't know who to use for a mortgage person. Of course, I know who to use for a mortgage person. I always recommend everybody to Alana. And Alana Hallaert and I have been working together for probably about 3-4 years now. And it's, in my business, I believe in making it as easy as possible to buy a home. It doesn't have to be stressful. There are different people involved in buying a house. There's, of course, your realtor, there's a title person, there's your homeowner's insurance agent, your mortgage person. So really, it's the whole team working together is going to make this a fun event. It's one of the biggest purchases you're ever going to make in your life, probably the biggest purchase you're ever going to make in your life. So I try to make everything as easy as possible for everybody. So today we're just going to briefly talk about maybe different types of loans, and for the first-time home buyer, just what kind of income you need for an average priced home, and really the difference in interest rates. Today interest rates are unbelievably low. I mean, I just can't see interest rates going any lower than this. Home prices, in my opinion, have bottomed out in Omaha, Nebraska, so it's basically the perfect time to buy. So I just wanted to talk a little bit to Alana and have you kind of get to meet her as well. And here we go. So Alana.
Hi. Welcome.
This is my first time I've ever done an interview on a blog, so we'll see how this goes.
Me too, thanks.
So tell me, how long have you been in the mortgage business?
I've been in lending since 1993. I've been a loan officer, originator, since 2003. So about 10 years.
Okay, great. So you've seen a lot of changes in just 10 years.
A lot of changes. Maybe more changes than ever in the last 12 months. So the industry is really in a flux mode.
Yeah. Well, I always hear on TV people say there's no money to be lent. That's not true. That's
not true. There's money out there. Lenders are very active on trying to think up programs that will benefit the customer, put them in a very good and safe environment to have a home loan. The requirements to get a loan may have tightened slightly, but there are still a lot of different programs for people depending on what you need. And that's generally our first question when we sit down with people is, what do you need? Where do you need to be with your payment? What are you going to be comfortable with? So we go through a real nice educational process with each customer, even second, third, and fourth time buyers. So they all need to kind of sit with us and help us get on the same page with what they need.
So you do an interview, kind of find out what needs analysis.
Absolutely, because I don't know what to help you with if we don't sit down and have that discussion first.
Well, that's good to know. So the different types of loans out there, I know a lot of times, like for the first-time home buyers, they always ask me if there's a zero down program. And I typically tell them, except for, is it VA, there isn't a zero down.
Yep, there are some different avenues to go if you're limited on what you have for cash for down payment. If you're a veteran, of course, you can always opt into 100% financing. Obviously, it's very unique to a veteran. The lowest down payments that are out there are going through FHA. They require 3.5% down. But if you're a first-time home buyer and if you qualify for the different caps and things they have for incomes, sometimes we can get some down payment assistance. Those generally require an educational survey that's done on the internet to make sure they understand what it means to be a homeowner. There's a few hoops to jump through, but a very, very good, strong program, and that's one of the things that we actually are the largest NIFA lender, which is the first-time home buyer here in Nebraska. So we do a lot of them, and it's kind of our forte when it comes to first-timers, we sit down and again go through the educational process and find out what they need. If they need the help with the down payment, we research those and find out if it works for them. Otherwise, FHA is generally the fallback for the lowest money down.
Now, what do they need for an FHA loan?
They need 3.5%. That's assuming that maybe we can get the seller to help with some of the closing costs and things of that nature, where your expertise comes into play.
Right.
But generally, it's 3.5%. And you can borrow up to $271,000 is the maximum here locally for FHA.
Okay. So 3.5% on a $270,000 house is pretty manageable.
It is, especially for somebody in that price range. They're probably planning on it. They maybe have some savings put away, and even at that point, we've found that there's other creative ways to help them look for those 401k loans. Gifts are welcome as long as they're from family. We can definitely do those kinds of things. So the industry may again have tightened up how to qualify, but once we find the right program, we start working with them on how to make sure that that fits what it is that they need.
And some people say, and every situation is different, but some people say, I had a late payment 6 months ago, let's say on a car loan. It was a 30-day late payment, and then 9 months ago they may have missed their credit card payment by 30 days. Is that pretty much going to put them out of the business, or is that something that you can help them with?
Well, it depends on the severity. You know, a lot of what drives the bus right now is credit scores. You know, we need to have certain credit scores to get certain programs, and they vary. So to just throw out, you have to have a 640 or you have to have a 700, it really doesn't fit anymore. Each thing is different and they change all the time. So that's why we stay in a lot of close contact with people that may or may not fit the box right this moment. A lot of times we help them get ready so that in 90 days, 6 months, or 12 months, we can get them to the point where they can buy. Late payments themselves are not necessarily something that will throw you out, but it is something that they look at, and it is something that has to be discussed. So regardless of who the lender ends up being, having that very open conversation about what happened, or perhaps how to prevent it from happening again, will be something that you have to be prepared to talk about.
Okay. Now also I wanted to talk about, let's say interest rates are floating somewhere between 4.25% and 4 3/8, 4.5%, and I know with knife I believe it's 4.25%.
It is.
So what I've seen some of my first-time home buyers, it seems like 125,000, you know, it's kind of a ballpark range for a lot of first-time home buyers. Now, roughly, what would the difference of the payment be between, like, say, 4.25% and 6%? Okay.
If you're using 125 as a guide for what you're purchasing, and we just keep it in apples to apples, 4.25 is going to be maybe $1,030 a month, somewhere right in there. That's with taxes and insurance. You raise that interest rate, which is definitely going to be happening at some point down the road, and raise it to 6%, you're probably about $135 more in a house payment. That's going to have a huge bearing on buying power. And if you're at 4.25, and let's say your income and your debts and everything sets you where you can be approved for $130 a month. If you wait and let's say buy a year from now instead, and the rates have risen to 6, and you still only qualify for a $1,030 payment, you're no longer buying a $125,000 house. Your buying power has decreased greatly, and you're probably looking at $110. So to have $15,000 in your purchase price of the type of quality or different amenities that you want in the house, that's gonna change that. That your view of what you get today is going to be very different if you would continue to wait. This environment for rates is extremely good.
Right. Well, and then also Two, a lot of my people that'll be watching the blog today, they may have already owned a home and they're thinking about refinancing. What would you say the rule of thumb is for, would you say 5% or higher you should think about refinancing? Is it about 1%?
That's a great question. I would say, depending on how large your loan is, the larger the loan, the smaller the difference has to be. For instance, if you're at 5 and we could do 4.5 and you have a $300,000 loan, that's gonna have a good impact. Now, if we could get a percentage point, that would be even better. But if you have a $120,000 loan and you're at 5 and we're looking at 4.5, that's probably not going to have a large enough impact to warrant doing that. So I would say always look at everything. Call your person that you are connected with that helps you with your home loans, or call me and I can run the numbers. It never hurts to look at that, especially I have right now a lot of people that are calling because they want to modify their term. They've been in their 30-year loan and the rates are so good that they're looking at 15-year loans. And you don't get much stronger than a 15-year loan as far as financial, strength in your home loan. So that would be a great way to look at a lot of different numbers for somebody.
Okay. And then some of our clients that I work with have larger loans, like a jumbo loan,
Sure.
which I believe is $417,000.
Yep, that's anything above the 417 is going to be your jumbos.
Okay, and you have the jumbo loans.
We do. We have a program that would help us with that. Every jumbo loan is very unique. Those are very special, and rightly so. They're outside the realm of what would be a regular conforming loan. So when you get to that level, it's a very hands-on process. So we would have to look at those on an individual basis.
Great. Well, I think that's a lot of information today. And okay, everybody, thanks for watching the blog today. If you have any questions for myself or Alana, I'll have the information on my blog. And again, have a great day.